Hey everybody, Economic Ninja here. I hope you're doing great. I want to talk to you about the auto industry today. I just got off the phone with one of my insiders at a very large national dealership, and that covers many different companies. They sell new, they sell used. There's so many things happening. I've got a lot of notes from him. I also want to talk about a YouTuber I met, a channel that I've followed for years because you guys know that I like exotic cars. I also like muscle cars. It's Daily Driven Exotics. And I talked to them at a racetrack I was at where they were racing, doing laps in Buttonwillow, California. And I want to talk about a conversation I had with them. And well, you know what? Let's just dive right into that. So I was talking to their team in between them going out on the course and getting times. They had multiple Lamborghinis there. I was in heaven just being able to see the cars. I can't wait till the day I actually get to drive one. And we were talking about the auto industry. I asked them what's happening specifically with Lamborghini and exotics as far as sales. And what they told me was that it has, and the word they used was it's on pause. The phrase, the sales are on pause right now. And a lot of people in the industry say that, right? That aren't into investing, really looking at the bigger macro picture of the economy and where we're at, the health of the borrower, the lender, where I'm going to talk about that, which stuff that's just staggering to me. They use the word it's paused. And there was another gentleman there that was really, man, he got my phone number. I wish I would have gotten his because he is following not only the auto industry, but economics. And he talked about he builds race cars. And he talked about in 2008 what it was like when everything stopped. And he said, a certain percentage of his business just people walked away. They didn't have the money. They lost their job. Everything went to crap in a handbasket quick. They didn't have anything. They were insolvent. He said that he had lots of people that had a lot of money, making millions of dollars a year, and they would come to him and they would say, it's one thing to have a lot of money, and I got a lot of money in the bank. I got millions in the bank. Let me open up my door. Get a little hot out here. It's one thing to have a lot of money in the bank, but because I'm not making any, because we're now in the Great Recession, and funds are just slowing down rapidly. I'm not going to dive into building up this race car. So he lost a lot of business, and those race cars, he said, just went into storage, into people's garages, off the racetrack, out of the mechanic shop, into their garages, and became essentially relics. Now, going back to the YouTube channel, Daily Driven Exotics, we were talking about the industry being paused, the exotics. Um, it's interesting how people perceive the market and how this is just a pause. But I explained to them how a pause is always what happens when it goes from parabolic to pause to this. Um, it'll turn in the opposite direction. Very rarely in economics do we see this and then a pause and then an increase. And the reason why is it because the only way you could go from a pause back to an increase when it was previously increasing, any market, whether it be exotic car sales, auto sales, home sales, anything, the only way that would happen is if the Federal Reserve and or the federal government juiced the markets. Now, we had an amazing conversation. As a matter of fact, I overtalked. I always talk too much. But they were shocked because they had never even heard of the CBDC that's coming out, the American CBDC, let alone the central bank digital currency in Canada. They had never heard about that, right? Very successful people. But it goes to show you that you could be extremely successful in one thing and not know something in another, right? I'm prime example of that. I don't know everything. I'm sort of a know-it-all. Sometimes I've been told, and it's true. But I don't know everything, right? I get things wrong all the time. So let's move from that conversation. And man, I wish I would have gotten their information because I would love to have interviewed. I want to say his name's Dave, the guy that runs the channel. That's always in all the videos, the Daily Exotics, because he told me a story of his financial history that's just awesome. I would have loved to have gotten that on film. But I hope the other gentleman that is a race car mechanic that owns the shop, because I believe he's from California, I hope he reaches out because we could really do some really neat content about the economics of racing and exotic cars. So, okay, let's talk about what my insider told me just today. I asked, what is going on with sales? Because I know this is the Christmas season for auto dealers. Auto dealers love this time of year. Why? Because people that don't think rationally, I'm going to be honest with you, and this isn't what he said, this is what I say. don't think rationally, get a little bit of money, i.e. their tax return, and it's burning a hole in their pocket, and they want to figure out a way to finance it and leverage that money into a car that they can't afford, that they should not be buying. And so these are the times where you can talk people that really aren't thinking clearly into some crazy products, and salesmen are really good at that. And he said, yes, it is absolutely blowing his expectations, and he is quite frankly shocked because he is watching the macro economic information and data that's coming out of the Federal Reserve and other entities. And he's like, I don't understand what is going on here. So let's talk about some numbers. First off, their sales numbers blow out, just blew past our goals. So for the month of March, he said prime dealers right now, prime dealers are doing 150 to 165% loan to value. Now, 165 is the high end, absolutely high end. And he said this is for people with a credit score of 680 and over. But there's the key: having a thick file, a thick credit report, lots of data, lots of meat, right? There's a lot of people out there that have 680 or more credit score that have, even somewhere of the upper 700s, even 800 credit score that have literally just a couple of things on their file, the thinnest file you'd ever seen. That is not going to get you these ultra high loan to values. And this is where I believe you're going to see the auto industry completely tank because the lenders are going to be caught. And I'll give you an example. A lot of people think that just because the lenders are doing this 150% loan to value, that they know something. No, they don't. Because the same banks are the ones that collapsed in 2006 to 2008 because they over leveraged the mortgage market, the mortgage-backed securities market, and they were giving way too high of loan-to-value ratios to borrowers that should not have been given the money in the first place for a home. All right, this exact same thing is happening in the car industry. And what you also need to understand, which is very vital information, is a lot of these people in these banks making these decisions aren't very old. They have not lived through the Great Recession as an investor. They were in high school or college. Okay. You have to really realize that when the consensus is there. Also, banks make so much money with fees, all kinds of things like that. So you have to remember they're motivated by that. If they're not making a loan and getting paid back in interest, they're not making any money. So that's another factor that they are thinking of, right? On top of that, they also always have in the back of their mind that the Federal Reserve and the government is going to bail them out. All right. If it gets too crazy, they're going to be bailed out. So I want people to understand that. And this is probably the most important factor of banks that are giving out these crazy loans. Remember, when all else fails, if a bank completely collapses, the executives walk away with their compensation packages. Usually the bondholders walk away too. And so there's a lot of gambling they just don't care about. Why? Because they can just spin up another bank. Okay, so people need to understand that. Just because they're giving out 100 prime dealers, giving out 150 to 165% loan to value doesn't mean they're right and that they don't think themselves that it can implode. All right, check this out. Right now, they're seeing, my insider is saying right now we're seeing a max 84 months, 7 years at 2.99% for new cars, which is absolutely unheard of, right? You think, how are you giving away a loan so much less when the 10-year bond is more? You're seeing all of these. I mean, shoot, just look at these numbers. They don't compare, right? But they're doing it. Why? Because if they don't sell a car, they don't make any money. If they don't make a loan, they don't make any money. All right. Used rates right now in March, he said, jumped in the arena that they're working in between 7.49% up to 9.86%. On a percentage basis, those percentage increases are massive. All right, that's just in the month of March. Huntington Lending, he was talking about, which is the fourth largest auto lender, is seeing increases as well in their lending rates. Axios is doing 10 to 11 year payments, I was told. And then check this out. These aren't on exotic cars. He gave an example of like a Dodge truck or a GMC truck. 10 years at 5.49%. Now, I didn't ask if those are new or used. I did not clarify that. I apologize. But to think of a 10 to 11 year, and Axios is a massive lender. All right. So now remember, you could ask for that higher rate, right? And the borrower is going to do it. They're going to go and take that loan. Why? Because the payment, that's all they care about. They're debt slaves. So that is what is right, just running these high car sales, these prices up and up and up. People are under the illusion, which is a delusion, of the strength of the economy and the strength of their job. In the meantime, we are seeing massive layoffs in the tech sector and other sectors. As a matter of fact, I think that the number one, I reported the other day, number one job cuts in an industry was actually in healthcare, which most people for the last year and a half have been saying in the comment section of these videos, I'm safe because I'm in healthcare. Because so many people are getting older and dying, and they need all that stuff. But that was the number one on a percentage basis job cuts, or the amount of jobs cut. Sorry, this last year, absolutely staggering. So now we're at like 10 and 11 years from Axios. Okay, um, the fact that he said that he blew out the sales was absolutely staggering. But I want you to remember this: even though the banks are making these foolish things and they know they're going to, or they think they're going to be backstopped, I think there's going to be a literally a coming to Jesus moment in the auto industry. And again, like I said, I am waiting to buy my cars till the fourth quarter of this year and into 2024. Why? Because the same banks that must make loans and the same car dealerships that must sell cars will still be making loans and selling cars in the next year, but it'll be in a incredibly much weaker environment with so many more people laid off. I think the secondary car market is going to be phenomenal. And I can't wait to be sitting on this channel at these auctions reporting to you how many of these cars are going no bid. Guys, I hope you got something out of this. I thank you so much. The information that people bring me and the people in the industry, different industries, are sharing stuff with me that I can see, that I can bring you information. But remember, this next month, you're going to see all the reporting that there are blowout car sale numbers. Just remember that what you see is not always what you get. And on the backside, loans are extending, interest rates are going up, and people are getting into more and more debt. And this is literally that bubble that is popping right before your eyes. This is that blow off top. This is literally the dumb money. Remember that Lamborghini dealer I talked about? And he said he became a Lamborghini dealer in like 2010, and he believes they're never going to go down in price. But he left his golf pro job in 2008 and lost his job as a golf pro. Why? Because nobody had money for green fees, and golf courses around the country were going bankrupt. If people don't have money during the Great Recession to pay for a game of golf, they sure as heck are not going to have money for a literally $100,000 vehicle or more. All right, guys, that being said, I thank you so much. The Economic Ninja is out.